A Singapore conglomerate, Keppel Corporation, wants to acquire and take Singapore Press Holdings private in a deal worth 3.4 billion Sing dollars. It includes $1.2 billion worth of SPH's stake in SPH REIT that will give out to shareholders. The bid comes 3 months after SPH announced it was hiving off its media business in a restructuring exercise. Michelle Teo with the details.
$2.2 billion. That's the price Keppel Corporation is willing to pay to take Singapore Press Holdings off the bourse. It's offering SPH shareholders per share 67 Singapore cents, around 0.6 Keppel REIT units and almost 0.8 SPH REIT units. Shareholders can sell them off once they get them. Keppel says the acquisition will let it tap SPH's senior living business and its fast-growing UK student accommodation.
These assets generate recurring investment income and will accelerate our plans to pivot Keppel Land's business model from residential trading with lumpy earnings towards more recurring income as an urban solutions provider. Keppel and SPH are already close partners in M1 and the Genting Lane data center project. Through the acquisition, Keppel will consolidate our shareholding interests in these strategic assets, streamlining decision-making and operational control.
Now, this offer can only go through if SPH's restructuring plan happens. Its shareholders will have to vote and approve for its media unit to be carved out as a public company limited by guarantee. An extraordinary general meeting is expected to be held in August or September this year to vote on that. And if approved, that means the acquisition of SPH could be done as quickly as December this year.
SPH says it had called for proposals to take the company private. CNA understands Keppel was selected among other suitors, but at least one analyst says the bid could still crumble.
Based on the current agreement, because it's a scheme of arrangement agreement, this means that you require 75% of shareholders' approval for this. If that does not take place, then the whole deal will fall apart. Based on the current transaction, there's no certainty as to whether Keppel, at this stage, whether Keppel will come back with a revised deal.
Keppel says the acquisition won't affect its finances. Meanwhile, it's on the lookout for stakes in renewables and decarbonisation firms. But the focus is to grow current businesses in a range of sectors such as marine, shipyard and infrastructure.